Hello, everyone. Welcome back to the Trading Room. I'm Shane Vernier, and this is the week ahead. Today, we're going to talk a little bit about what's going on in the world, and there is a lot going on. We've also got sort of a big-time rally on Wall Street. We've gapped up on really a heavy bullish open. Today is Columbus Day in the United States. It's sort of a bank holiday. We weren't really looking for a big move today. You're getting big moves. These are big moves. Typically, I come in and I say, we got a game plan. We got to be patient. We got to do all these different things. Right now, it's an explosion north. I mean, the big move for me, the one that's blowing me away right now is silver. Silver is gapped up $51, $52 now. We don't really know how high the silver market's going to go. We were very, very cautious about that 50 level, though. Talked a lot about that breakout, more than likely going to come across the board right above those all-time highs at 49.81 and then 50. And now you're printing, what, 52? Oh, that's the thing about a trending market, guys, especially when you're making all-time highs. There are no rules. There are no rules. That market can go as high as anything you can imagine. It could go to $100. It really could. Will it? Probably not in a straight line, but I think you're probably printing like 55s and 60s here relatively soon. 50 was the biggest deal probably in the metals markets. 4,000 was big for gold. 5,000 is going to be bigger. $50 for silver really is the story. It's becoming the story of early Q4 here. So I want to welcome everybody back to the room. I think it's a fantastic day to be trading. I'm confident everybody's done well. You've managed your risk. You're doing some things that are probably smart. The biggest thing that I would say today, though, bank holidays, you typically do not see moves like this. This is big. This is a complete retracement off of Friday's sell-off late in the day. We had a trade idea out for the US 100. That one boiled down to staying power, if you could actually hold the position, because we did gap higher and it cashed in, but it was going to be a real tough trade to take, especially with Trump talking on Friday. Trump's talking right now in the Middle East. So there's a lot going on, guys. I want to welcome everybody back to the trading room. Yes, sir. Good to see you. Yes, sir. Always welcome. Zion. Good to see you, Zion. I'm not really understanding what you're writing there, but maybe somebody else can give me a hint. I don't know. But T Marina, good to see you. T Marina, welcome. Lita, good to see you. Lita, welcome. Bobby Bob, always a pleasure. Bobby Bob, Tuku, and Andrea Garwell. Good to see you, Andrea. Welcome. If you guys have any real markets that you want me to cover today, I'm more than happy to do so. This is going to be sort of I would call it an unconventional stream. There isn't really a whole heck of a lot on the table for this week. And I know, well, what are you talking about, Shane? There's CPI, there's all these different things, but we don't know if they're going to happen. And this is sort of week 3 of this for us. We're going government shutdown, poised to enter a third week. This really is messing up all of our numbers. We've done NFP live 2 weeks in a row now. We're going to shoot for a third. If we don't get a deal by then, we're probably not going to cover it live. But NFP, supposedly Friday. CPI, they called the CPI workers back to actually get to work on the inflation numbers. Those were supposed to be out Wednesday. Now it's looking like that's in doubt. I really don't know what to tell you. From a trading standpoint, this week is unique. It really is unique because you have these huge numbers. You have CPI, you have NFP. These things are going to run the markets. We don't know if we're going to get them. And so from sort of your old motto, you need to be prepared. We need to be prepared, and you need to be watching your news feed all the time. As soon as the government reopens for business, and we're expecting it probably any time now, as soon as that deal's cut, the government reopens, you're going to see those numbers drop probably in short order. So you've got to be very careful with your short-term exposure, even your long-term exposure. If you're swing trading this week, you need to understand that that NFP number, when it drops, it's likely to be a doozy. It's really going to shake the markets up. Now, CPI typically is another monster market mover. Do we get it? I don't know. I don't know if we get it or not. I mean, there's a lot on the plate for us today, guys. And I'm telling you right now that if you don't know when something's going to happen, you need to probably be careful. And I always preach care. Take care of your money. Don't just throw it around. It's going to be really hard this week because we're not going to know when these things are going to drop. You need to be watching the news all the time. I'll give you as many updates as I can. You can always check us out on X, How to Trade on X. Check me out on X, Shane V Trader, and then also just check into the trading room every day. But if we get wind or get word that they're going to drop a number, I will tell you as soon as I know, because it's very important that we don't get exposed on something like that. Let me see Adam. Good to see you, Adam. Welcome. Like I said, Dave F19. Good to see you, Dave. Any questions at all, be sure to ask today. This is going to be an interesting stream. We're going to go ahead. We're going to set you up for what's coming our way this week. And I just told you that we don't know. We don't know. So right here, here's a nice big pullback from 25,000. This is sort of the weekly chart. And what happened Friday was very interesting. I mean, you had Trump come out during the mid-session and say that he was going to raise tariffs, and they were going after China over rare earth minerals, and they were canceling. There was a summit with Xi. That's canceled. That's off the board. And it really prompted sort of a mini little panic there on Friday. Nice, big, deep pullback. We were looking to go long somewhere right around 38%. That would have been a real tough position to hold. But if you did hold it, and if you did have the institutional money, or your leverage was dialed down to where it needed to be, the gap up today was absolutely fantastic. So all of a sudden, you're looking at a US 100 that's up 3% today. Got back all of the losses from Friday, paired those losses, and now you're making another run at all-time highs. 25,000 sort of been a sticking point for the US 100 for the NASDAQ. A lot of sellers in there, a lot of two-way action. We've given really hours and hours and hours of intel on what two-way action is and how you can make money from it. 25,000 clearly is a hot level. It's being contested. Every time it gets tested, there's sellers that are there that defend it. And they're going to be there until they're not there. And once they're not there, you'll see what we have in silver today. We just have a monster, just an absolute explosion up over 50. And really big news. I mean, historical news, really. But 25,000, we're going to go up and test that again. There's no question. The biggest challenge with trading these derivatives products, like a CFD, like a futures contract, is you've got to be able to figure out what your leverage is, what your exposure is, and you do need some staying power. I mean, there's so much money to be made in these markets, but could you really have taken that draw when basically the world was ending last Friday? I mean, this is no joke right here. This is absolute devastation to somebody that was long with every reason to be long going into the European session. I mean, you'll have to ignore my level there, but right in there, I mean, that's the London Open. Things are looking good, and then we came out and we had just an absolutely huge announcement from Trump that basically he was taking the tariffs to the next level with China, and it absolutely crashed the global markets. It really did. So there's your market crash Friday, right? We were looking to get long right in here, and we made a few bucks here initially, but the big crash came towards the end of the day because nobody knew what the heck was going to happen coming into Monday's session. So that right there is a textbook evidence, prima facie evidence. If you're serious about trading and understanding what it means to hold something into a market closure, this is what it means. You are getting destroyed Friday. You open up big on Monday, and life's good again. If you have staying power, you can make those trades and hold them. There's no question that you want to be long, really. I was one of those people, and we're going to do a year of the end summary. I'm going to do a year of the end summary video, and I'm going to talk about what I thought was going to happen during this year. I had a market crash developing early. We were pretty close with that in April. That was a big-time crash there, but it wasn't necessarily as deep as I thought it was going to be. And now you have to be long. If you're not net long, you're going to really get hurt. So interest rate cuts, probably a dovish FOMC. You probably should be a bidder, not a seller. That's sure. That's for sure. Let me see. Yes, sir. What do you got? What do you got for the Euro USD? Well, I mean, there's lots of things going on in the Euro USD. Let's go ahead and pull it up. I'll give you my opinion on it with my indicators and what I use. If you're brand new to the live streams, this is sort of my own, I wouldn't call it secret sauce. They're all public domain. A few of the things that I do that I don't talk about on live stream because there are some liability issues. So, you start signing non-disclosure agreements. You need to make sure that you honor them. That's been my experience in this world. you sign a non-disclosure, you don't go disclosing. Let's put it that way. So this is part of what I do in the markets, but it's a relatively strong strategy. You got your Bollinger Bands there. You got a 13-period EMA is always big for me. And you've also got Fibonacci retracements, which to me really are the key that unlocks the markets. In my opinion, the Fibonacci sequence, the Fibonacci retracement sequence, the golden ratio, I don't know if it's magic. I don't know if it's alchemy. I don't know what it is. But I will tell you that the golden ratio and the Fibonacci retracements, they appear so many times in the natural world. I mean, there's folks that have done studies on snowflakes, and the proportionality is real similar to the Fibonacci sequence. And I went, no kidding. That's an interesting part of these numbers. Now, it may just be the way that we interpret the universe around us. That could be too. It may be we just think in terms of the golden ratio. Okay, well, maybe that's it. But when it comes to trading, some people look at a price chart and it looks completely random. And one of the things going on 4 years, in November, thousands of hours probably now streaming. we can't make an order out of the madness. A lot of people look at charts and go, I don't understand any of it. Well, get some indicators, understand key levels, and all of it will start to make sense to you. It's no different than a heart surgeon looking at in an EKG. I won't tell the whole story, but we were in a situation where my father had some heart issues, and we were looking at the EKGs, and we were looking at all the different ways that the heart surgeons and everybody looked at how your heart was performing, and it looked like just noise to me. I couldn't figure it out, and I look at charts for a living, and I know that a lot of people out there, they look at a pricing chart like what I have in front of you right now, and they go, I don't know anything about that. And I said, don't worry about it. Don't worry about it. My point is this. We looked at the EKGs, and within about a week of looking at EKGs, okay, I understood how to read an EKG. It wasn't that hard. And you will get there with price. So if you're brand new and you're intimidated, you go, this guy's talking fast, and he's showing me charts, and he's got all these indicators. Don't worry about it. Just relax, take your time, learn a little bit each and every day. And I would be surprised if you're not up to speed in a few months. That's not a very long time to learn a discipline. And then you get into having to apply your discipline day after day after day, and that's what makes the good traders great traders and the great traders fantastic traders. It's what makes the losing traders, not having any discipline. Today was one of those days where I had no interest in trading until I saw the price action, and I said, yeah, today's the day you trade, just because there's so much action. All right, Euro USD, let's go ahead. I've droned on long enough. Let's go to a 4-hour chart. I like the 4-hour chart really with Forex pairs. They're 24-hour markets. You have an opportunity really to get into some nice ranges with the 4-hour chart. As far as I'm concerned, right there, what do you got? You got the 9th of October, last week's low. If I'm looking at key levels, I definitely spot that and mark it. Last week's low, I believe that's going to be somewhere right around 115.42. So 115.50 seems to be pretty important. If you're a smart money concept trader, if you're interested in that type of thing, I mean, we could talk liquidity sweeps. I'm not going to bore you with all that, but the key numbers are what's important. And it's always a chicken or the egg thing, guys. I mean, we're talking a little bit of psychology today, but it's always chicken or the egg. It's like, okay, well, what makes price action? What makes a liquidity sweep? I contend that the number makes it all. I contend that the key levels, that's what determines your liquidity in your participation. In my opinion, that's what happens. Now, it doesn't mean that that's correct. There is a lot to be said for market structure when you look at the swing highs and the swing lows and the order blocks and all that jazz. Okay, that's great. But what makes all that go? Key levels. This is an auction. We're participating in an auction. And always remember auctions and the way human beings work. Now, we are going into the era of AI. Now, if you want to, okay, you're right there. If you want to talk about AI trading, I don't think anybody really knows what it is just yet. Can a computer spot patterns in price behavior that we can't? Probably. Got to remember, AI has access to all the information that we've created over the last 10,000 years. As long as it's online, the AI can sort through patterns that we could never see. It has that type of power. How will that impact trading? Will the patterns be any different around key numbers now that AI is involved? I don't think so. I don't see any evidence of that just yet. 115.50, clearly a big-time level here for the Euro USD. So do you want to buy pullbacks or sell them? I mean, the dollar's been pretty good. I mean, lately the dollar's been putting on a pretty good show. You've seen about the last 2 weeks here. What do you have? I was relatively certain we were going to go up and check 120. I still am. I think that we're going to get an opportunity to sell up there, and that's going to be fantastic. But the rest of this, where do we go from here? Well, sort of a challenge right now with the dollar rallying after the rate cuts have sort of been announced and after everything's been dovish. So if we know that we've got a key level somewhere right down around 115.50, what happens here? Well, I mean, if you're an order block and a long-term trader, you say, okay, we've done a ton of business at this zone, a ton of business. What do we do here? If we sell off big, we'll have an opportunity down there at 112.50. What I would point out for the rest of the month, we're on the 13th day of the month. We're sort of burning through October relatively quickly. Your EMA right there, your 13-period EMA is at 112.62. Okay, that's a big deal. 38% is at 112.50. I would be aware of that level. I don't think it's going to come into play. I really don't. But if it does, we're bidding, and we're bidding with both hands there. We're throwing money at that. So I love that level. Is that, can we trade that and make any money today? No. We've got to figure out a different way to approach it, and that's always time frames. So what you're going to want to do is dial down your granularity, pull up a chart. I love the 4 hour. The 4 hour on the Forex, I see a lot of really great tendencies there. It probably is my go-to. I mean, if you talk Forex charts, what would you trade? I said I would trade a 4 hour chart. Are there better ways to trade currencies? Maybe not. OTC markets are fantastic. There's a lot of inefficiencies there that you can capitalize on. It's not like trading a futures contract where it's a pretty tight market no matter what. There's not a heck of a lot of wiggle room. I would be looking probably at your 4 hour charts for your Forex pairs. As far as this goes, though, I'm probably a bidder from 115.50 just because I want to play against the dollar, even though it hasn't been popular in the last couple of weeks. I still see playing against the dollar as being the ticket here going into the future. But, you know, we're not taking huge positions. We're not losing cars. We're not losing houses. We're not losing the cattle. We're not, you know, we're trying to hold on to our assets while the dollar figures out what it's going to do. Your DXY is right up around 99. So the dollar is coming back. Now, the question is it just that dead? Is this a dead cat bounce? Do we trend down? I'm still of the opinion that your dollar index, you're probably going to be printing 90 at some point, and I think it happens in the next year. It looks to me like that's what the Trump administration wants to do. They want to go sort of the way of Japan, maybe not with as much debt, not GDP to debt ratio, but they want to devalue your dollar so you get that economic growth. A lot of people believe the undercurrents here in the United States are very, very negative. I'm not they call them black pillars. You take the black pill, everything, the sky's falling every single day. I'm not one of those people. I look at the evidence in front of me. The markets are moving north. So we got all these different ways that we can trade it. How can we trade the dollar? For me, I think we're going to get some really juicy chances to buy Euro USD, Great Britain Pound USD, to buy those pairs at a severe discount. And I think they're coming our way probably in the next 6 weeks. And I know you're like, how do you know? And I go, I don't know. But we've got some experience here. We're pretty dialed into a lot of what's going on in front of us. I could see this sort of just being a dead cat bounce from the dollar, you know, and not to get too graphic with you guys, but a dead cat bounce is, if you throw a dead cat off the top of a building, does it bounce when it hits the pavement? A little bit, yeah. So we're talking about a market that's been in a free fall. Now we're bouncing back. Is the dollar really strong? No, I don't believe that for a minute. But we may prove it. Let's go to our 920 EMA crossover. This is a 4 hour chart, US dollar, Japanese yen. If you're still in that long, you're probably right. You're probably right. I mean, it's working very, very well. Let's go ahead and throw our Euro USD on this 920 crossover, though, and see exactly what's happening. Big fan of this strategy on a 4 hour chart for Forex. I really am. I see a lot of really great things, and I'm not a crossover trader. A lot of people really believe in crossovers as being the end-all, be-all, and the holy grail. There is no holy grail. You're going to have to know your risk management. You're going to have to build these trades, but it's really difficult to argue with some of this stuff. I mean, you lost right there back on the 29th of September. You lost, but look at what you got right away in October. You got a sell signal right there, and that thing has been absolute money for 2 weeks. So something to think about there with when you're trading the 920. You can see we sort of had a little bit of a weave here and then a crossover. But this sell here, this sell is pretty darn good. This sell is fantastic. It's an interesting strategy. If you haven't seen the video, check it out on How to Trade Calm on YouTube. It can get you up and rolling with it relatively quickly. And this is all coded and everything. We've built the Pine script, and the code is just in the comments section beneath the video. But this is not too bad of definitely the time frame you want to be working with. Forex pairs are fascinating to me because they don't really move. When they move, they trend. So when a currency moves, it typically trends. And what we see out of the other markets, futures specifically, what I trade, I mean, I'm looking at crude oil, I'm looking at gold, I'm looking at the equities indices, and they really do move with a lot more volatility than you get out of a Forex pair. And this is one of those things that I always say that time frame is everything. A lot of folks really want to trade Forex pairs on 2-minute charts, 3-minute charts, 1-minute charts, 5 minutes. And that's great. And you can do that when the market's active. And the problem with the Forex is, you know, it's sort of like being in a sailboat out in the middle of the ocean. You know, the wind doesn't blow all the time. and you've got to be smart enough to know, you go, okay, this is sort of a dead session. I'm more than likely going to get chopped up if I try to pick a direction on any of these Forex pairs. So you've got to be very astute of when you trade. I highly recommend the U.S.-London overlap. That's probably your best time to trade Forex currencies. It really is. There's a lot of action in there. The folks over in the UK, over in London, I've been there. It's nice. I don't know if I'm going back, but it's not bad. I don't have any problem with London. The folks in London are trading. The folks in New York are trading. tremendous amount of volume right then. That's probably when you want to be riding coattails and you want to be looking to make plays in the market. That's what I would say. I think that's a pretty good way to approach Forex trading. If you want to be more of a swing trader and a long-term trader, 4-hour charts, man, you really can't go wrong with that. You really can't. All right. I am way behind on the live chat. Let me see. Check gold, please. Yeah, I'm going to check gold right now. You guys are right. What's going on with gold? Check gold. I will do. Lewis Shepard, good to see you. Lewis, welcome. Arun Patel, supply and demand zones, support and resistance zones. Yeah, I mean, supply and demand, support and resistance. I grew up on support and resistance, but supply and demand, a lot of folks say that now. Also the order blocks and all the jazz that you have with your smart money concept lingo. It's like a different language, but it doesn't matter, Arun. I think you've got the ticket there. You know. Good evening, boss from Nigeria. Good to see you. Good to see you. Welcome. Man, I am just terrible with pronunciations. Toonie, do you Toonie? Yeri? I think I'm close. All right, market closed early today, bank holiday. Yeah, but the market's really rocking hard. I think that the liquidity is definitely there, All right, let's get to the big ticket. Everybody wants to talk about gold, so let's do it. 920 EMA crossover. They say not to say that you got rich. That signal right there made you rich. Right there. I mean, it's easy to see these things in hindsight, but the 9 crossed over the 20 on the daily time frame, and I mean that bid right there was right around 3,300, and you're about $1,000 higher now, 30-something% in just a couple of weeks. That came across the board back in late August. So we're sitting here 6 weeks later. That's an absolute banger. I mean, the market's absolutely exploded. 4,000 was a big deal. I mean, you can see this right here. You can see the compression right around 4,000, but we've broken now. So if we're serious about potentially trading gold, with what I call conviction, you're going to want to buy pullbacks. This level right here, I sort of pointed that out last week, 4,000. I said, it's probably the new bottom of your market. I would be very, very surprised if 4,000 doesn't hold up as downside support. Well, what happened? Compression, big time flushed all the retail longs out. And you will see this more times if you trade and you stay in this game a long time. Compression, break. That right there, that big negative candle, flushed all the retail traders out. All the retail longs, everybody that was smart enough to buy 4,000, how many of those folks do you think are still left? Honestly, people like me and you, people that show up with a trading account. I don't want to talk numbers, but we'll talk, let's say anywhere from 2,500 up to 25,000. Basically, your retail trader, a small retail trader. You show up and you got your money and you're like, okay, if we break above 4,000, we're probably going very, very high. It's absolutely correct. But what does a breakout look like? Okay, some time right there. There's a 4-hour chart. Had some compression here, then we broke high. Now we're compressed. We pull back to 4,000 twice perfectly, and then you get the rally, and then we sweep all the longs that were out. Now, this is the difference between being a trader and an investor. If you're an investor, you bought gold and you walked away from it. And you said, whatever, we're going to 5,000. I'll look at the chart then. I'll talk about it then. Okay, great. If you're a trader, you don't have that luxury because you took a leveraged position. Every minute you're in this market that it goes down, it's costing you money. You either have enough to cover what you think is a pretty vicious pullback, and it was. Take a look at that 4 hours. 39.44, it washed down everybody. Probably a tremendous amount of stop losses were at 39.50 to the long side. They got smoked. Now what happened? Compression, break, and now you're off to the races. Everybody that bought in here was right. They were right. And this is the hardest part of trading. It's when you're right and you get swept out and then the market goes in the direction. If you're going to be a trader and if you're interested in playing this game for a long period of time, and it is a game, believe me, be ready for stuff like this. Be ready for it. You're going to get stopped out of positions that end up winning. It's going to happen. Before you get into any position, you need to ask yourself, can I hold this thing? Am I equipped to take this position? Is what I'm doing correct? Or am I gambling? That's the bottom line in trading. And just real quick, when you make a trade, you're giving away something to get something back in return. That's the definition of a trade. It doesn't matter if we're trading dollars, cents, euros. Doesn't matter if we're trading wampum, if we're trading tobacco or whiskey. It doesn't matter. What matters is when you give something up, you're getting something back. Now, the problem is with our leverage, sometimes it gets out of whack, and we give up too much too soon. And when you look at a chart like this gold chart, this is the difference between a winning trader and a losing trader. A winning trader probably is holding this long, but got out. Said, okay, I'm going to get stopped out. And the winning trader's probably back long again. Now, the losing trader put too much leverage on up here, had a stop right around 4,000, because that's where you would put, that's where you would put your stop losses. You can see the big candle right there. That's where everybody was getting stopped out, right beneath 4,000. Bam, gone. Price sort of regroups. You come in for a fresh week, and now you're off to the races. What can you really say about that? If you're long and you got stopped out, I mean, I hate to say it, I'm sorry, but you got to learn. You got to figure out and say, okay, next time I get in that situation, what am I going to do? Is it good enough to buy up there? We talked about it. We spotted 5-minute trades about gold, and I said, it's not good enough to buy up here. It's not good. It's not a good enough trade. And the reason why is there's going to be a sweep. Bam, big time sweep lower. So what did the smart money do? I mean, the smart money, they got billions and trillions, and they hold longs. But the smart trader, what did the smart trader do? Waited. Either waited for a pullback, maybe down in here somewhere, 39.50. Maybe that was a pretty good entry. You could see the bidders were there. Or waited for the second time it broke up above 4,000, went long there. There's nothing wrong with waiting. You very rarely get yourself into trouble waiting. In any case, I drone on long enough here. Let's go ahead and spot a trade. I want to buy pullbacks any way that I possibly can. So if I'm looking at a gold market, 4-hour chart for a gold market's pretty good. It's not a bad time frame. It is a true 24-hour commodity, so you can trade it pretty much around the clock. The big pullback here, though, 4,000, somewhere down in there, 4,061. Yeah, I mean, any chance you really get to buy a retracement level, I would say, yeah, guns up. You want to do it. We can go to a daily chart, and you'll notice that the ranges are just too big. You'll see that you'd have to extend your Fibonacci's there. And what do you have? You're probably not going to get an opportunity there, but 40.50 is fantastic. This area right up in here, do we think that this market's going to stop trending higher? No, we don't. I think the restrictor plates are off of the metals markets for whatever reason. There's been a lot of people over the years that say that they're manipulated, that the institutions keep the price of metals down because a lot of the retail investors, folks like you and me, we have a gold bar or two in our basement or something, and the idea was to always keep those commodities down. We're not seeing that now. I think that you're definitely leaning into a very, very bullish situation for the metals market. And, if you want to do something, you probably want to be long. But you can see right here, we're pushing this high. It's going to be very difficult for us to get a retracement. This is going to be most people that are veteran traders or technical analysis experts or fiends or whatever you want to call it. They're going to laugh at that right there. But 5,000 is where we're going. So how we get there is open for debate. I'd be looking at 42.50, potential resistance 45, potential resistance 47.50. All those areas could potentially bring some sellers in. You just want to be very, very careful about what you do and how you have your entries. We will have a trade idea out on gold later this week. I guarantee you that. I just want to see exactly what happens right now. Big time move. Silver's probably the story of the day, no question. We nailed this one. All-time highs. We talked about 49.81. A lot of volume came in the market when we smashed that all-time high, and then we broke up above 50. So the idea now is relatively simple. You're trending. I mean, like I said, the restrictor plates are off. You're trending. What do you want to do? You want to buy? You want to join the trend? Right now, there's no sense in trying to pick a top in the silver market. You're more than likely going to lose. 90% of the people lose 100% of their money fighting trends. Be very, very careful fighting trends. You don't want to sell. If a person wanted to sell, maybe sell around these big round numbers, maybe scalp right in front of 55, maybe scalp right in front of 57.50, 60. You could probably get away with that, but you've got to keep your stop losses very tight. I mean, listen, the sellers are either there or they're not, and if they are not there, you cannot hold these positions. You will get destroyed. And I don't want to see anybody in here get destroyed. You don't want to swim in that pool. I'll tell you some stories one of these days about how bad the housing market got for me back in the day, back in 2011 and 12. I'll tell those stories some other time. But I will tell you this. Do not get overextended on one trade. Do not let one trade change your life and beat you. Now, there's ways that I understand the top side of just going all in and saying, I'm betting it all and we're going to make a fortune on this trade. I understand that. They used to call them plane ticket trades back in the commodity pits in Chicago. A guy would go into the pit, or a gal would go into the pit, and they would buy a plane ticket from O'Hare later in the day. And they would show up and they would go long. Soybeans were big for this. They would go long, or the coffee markets, but that was in the NYMEX. That was earlier. But in the Merc, so let's say I wanted to show up and I just put all of my money on crude oil, and I was betting that it was going to go up, and it didn't go up. Well, they called it a plane ticket trade, and these guys would buy plane tickets at O'Hare, and if their trade didn't come in or they were wrong or they lost, they would just go to the airport and leave town. Because it's all leveraged. And if you lose a big trade like that, they're going to say, yeah, you need to sell your house and your cars and try to make good on this. Those guys would buy a plane ticket and just leave town. They'd say, well, we lost. Called it a plane ticket trade. When you play at that level, there's an old saying that if you go that deep, you better be right. You better be right. And I don't believe in that. I went long real estate back in the day, and I was real long real estate. And it didn't work. It just didn't work, and I held on as long as I could, probably 2 years longer than I should have. And at the end of the day, the stress in the way that changes you as a person, you don't want to do that. That's why I laugh at the YouTubers that are out there. Oh, I made $1 million today. Oh, I'm in a private jet. I go, yeah. I know what kind of risk it takes to make that money. And if you play in that league, I wish you well. But I got to tell you, you swim in the deep end of the pool, you better be ready for the consequences. I don't think you need to do that with this game. Build slow. Build yourself a concrete foundation. Build slow and get to a point where you're always trading from a position of strength. You're never sitting around with your fingers crossed hoping that it goes up or hoping that it goes down. If you find yourself doing that, it's pretty much already over. That would be my advice for a Monday. Nobody asked, but I figured I'd offer it. All right, you see right here silver, though. I mean, you want to buy it any chance you really get. We can go down to a 4-hour chart here with silver. There's been some interesting action with silver right around the Asian Open, too. So keep a close eye on that Tokyo Open if you're a silver trader. Very difficult to trade this on the futures markets unless you're trading micro silver, just because the margins are absolutely astounding, and it takes a lot of money to trade silver. And it has to do with the way it's priced. We'll probably do a video on it sometime. But you see right here, here's a nice big breakout. There was sort of your pullback, and we're sort of waiting. I think you buy any pullback you get. I really do. But that's just that's how I would approach it. I don't give financial advice, and I don't tell you what to do. That was sure. TJ, how you doing? How you doing, sir? That was sad. Check out the EU. Yeah, I already looked at the euro US dollar, TJ. No worries. Thanks for your advice, dude. No, I'm just trying to say it. I'm gonna get off my soapbox. Mondays I typically talk a little bit of psychology. I've been there. And I've been in a financial position that is impossible. And it wasn't because I was stupid or that we were reckless. We got in and we bought real estate and built the houses. I actually did the work. That's what I was in my 20s. I was a construction worker. So I got a lot of love for the blue collar folks out there that are getting into trading. I mean, I'm from a blue collar background. My parents were blue collar. I'm blue collar. I mean, we bring the lunch pail to work. We go to work. And the thing about the real estate deal is it was so massive. And it was one of those things, guys, where you got in and you did well right away. I was making a lot of money as a young person, and I didn't need to be doing that. It's sort of like when you get into trading and you hit a big trade and you walk away, you push all your chips and you make like 5 or 10 grand on a trade or something, and you go, I'm going to be the next Zuckerberg. I'm going to have $1 billion in the bank soon. Honestly, it sounds silly. A lot of people are like, oh, come on, Shane. But I'm telling you, it's very real. That happened to me in real estate. Had a couple deals that went really great. Built some houses and sold them, and things were looking up. And I go, well, this is fantastic. And then the bottom fell out of the thing. And I learned about risk. I learned I was taking risks I didn't even know I was taking. And then I watched how everything developed when the price of these things weren't going up anymore, when they stayed the same and started coming down a little bit. Now, a lot of you probably can't relate because you've seen a real estate market, at least here in the United States and in Europe. I was just over in Greece and Europe talking to those folks about real estate. It really is the same everywhere. The prices of these things are just going up. And you don't really know what it's like when the bottom falls out. And when the bottom falls out, everybody's looking for a life preserver. They're all looking for parachutes, and there's not enough to go around. And I was in a position where I was one of those guys that didn't have a parachute. And I mean, I hit the ground, and I hit it hard. And it was a really, really hard thing. In one respect, it was a blessing that I actually got to transition from that area of business into the markets. So in that way, it was a blessing, but it was the school of hard knocks where you learned a lot about everything. You learned about what creditors do when you get behind. You learned about how banks treat you when you're not a great bet anymore. You learn about real estate agents. You learn about home buyers, home sellers. You learn about the competition. All of a sudden, people are coming out of the woodwork, and they don't necessarily want to hurt you and take you down, but they want to take your assets. You learn about all that. In trading is, in one respect, it's a lot better because you can just get out. If you have to get out, you can just close your position and get out. Those other things, the real estate end of it, you couldn't get out. And so I always say that, when you get into the markets, you need to be trading one that's deep and that's liquid. So if it goes against you, if you're long, there's always a seller. You always have somebody that can get you out of a trade. The problem with some of these things, like we saw in the NASDAQ, if you went home short the NASDAQ Friday, you got destroyed today. I mean, that's a gap up of about 2%. We're pairing our gains now. But realistically, that type of loss is something that ends your trading career. And so I'm always you guys probably are tired of hearing it from me, but I'm like, be careful. Be careful on Friday. Be careful with your exposure. Be careful. Because if you want to trade, you got to have money to trade. You either have to have prop money or your own money. And if you lose all your money, you can't trade. And if you can't trade, you can't make money trading. So I am a big fan of caution. Caution's a great word. Cautionary is a great word. But to each their own. Everybody's got to learn that for themselves. And you get to a point in life and in trading where you're just tired of losing money. You get tired of losing money. And I reached that point when I was about 31. I'm 46 now, and I said, hey, enough's enough. Enough's enough. It's time to get dialed in and let's go ahead and stack some chips, because you have to have that mentality if you're going to trade. You have to expect success, and you have to want to make the money. It's very important. Not many people talk about want. Everybody thinks they want it. Well, yeah, you're going to make it, and it's going to make, it's the old thing, more money, more problems. You have to learn how to manage your money in your lifestyle as a trader, because you can make a lot of money and you can lose a lot of money. But if you stick with it and you build a lifestyle that's conducive to success, you sort of fall into your rhythm. I call it your cruising altitude, 30,000 feet. We've reached our cruising altitude. If you find your cruising altitude and you just go forward, and you don't worry about getting swept out on a gold trade that you shouldn't have got swept out on because you're overextended. That's really all there is to it. All right, we got a couple more pairs we're going to look at. We might even look at some crypto here, but I'm sort of rambling on. It's a good psychology session, though. Big thing we got to remember this week is we had a peace deal, a big-time peace deal. Trump's in the Middle East right now. There was a major peace deal. Hostages were returned. That's a fantastic thing. That's a very, very good thing. Anytime you can stop a war or get a war finished, I mean, that's then the process of healing hopefully can begin. So that was a big news over the weekend. But right now it's the U.S. government shutdown. We don't know when we're getting our numbers. And let's go ahead and check this out. Remember, if you want to trade any of these ideas that we go over, or you want to really do anything in the markets, head on over to Switch. A lot going on with Switch over the next year. I think you guys are going to really be surprised at Switch markets and the value that we're passing along to traders. We got a whole new set of trading tools out there that are free. I'll go over them tomorrow. We'll do maybe a little brief tutorial, but there's a lot there for you guys to use absolutely free. We did have a trade idea, trade update, a Great Britain pound USD. I sort of put this one out last Friday ahead of NFP in case we got the number. I really like this one. This is a monthly chart. We've got a 13-month EMA, which is a big number. You need to respect it, 131.75-ish, 131.71. And then you've got 38% down there at 131.43. So you got about a 30 pip range right in this zone where you could see a definite bounce. So I'm watching that closely. We're down there a little bit. I mean, we're trading 133.25 right now, so we're about 200 pips off of that, but I think we have an opportunity there maybe to hit that a little bit later this week. Remember, CPI supposedly, NFP, we don't know when these numbers are coming, but they will move the markets. I definitely want to buy any sort of deep retracement across the majors and play against the dollar, but right now the dollar's up, so we just got to sort of stay put and see if we get our levels, that's for sure. Let's go ahead. One other thing that we do need to cover here, though, is sort of our weekly lineup. This is the week ahead. Columbus Day is today. You still have a market opening, but it's a big trend day. It really is. The markets are rocking and rolling now. If you want to trade today, I would say all systems go. Thumbs up. Jerome Powell's supposed to speak tomorrow. We'll go ahead and give you coverage of that. We're going to try to go a little bit earlier in the mornings this week with our stream schedule. So instead of about this time, I had to delay today's stream because we did have some internet problems here in Montana. First snow of the year. It got some really crazy weather. But we're up and running now. So we're going to be going a little bit earlier in the morning this week unless those schedules change. Just be sure to check into the How to Trade trading room, and you should know exactly when we're going live. US CPI, I have question marks. I don't know. It was planned for Wednesday. I believe it's off the charts now, but we have PPI penciled in for Thursday. This is going to be really tricky. I genuinely don't know, and I don't want to lead you down the wrong path. So just keep checking back this week, and we'll get those releases out to you as soon as we can. Jay Powell's supposed to speak on Thursday as well. We will see what Jay says. There's a lot of change coming to the FOMC and the Fed. That's a big-time deal. So we're going to, anytime Jay Powell says anything right now, it's going to have added importance. And then Friday is going to be U.S. non-farm payrolls, NFP. We'll see what happens. I don't know what's going to happen. I don't know if we're going to get it this week. It all depends on the government. If the government reopens for business, then we will get it. So we've got some trades out there, Great Britain pound USD. We also have another one in the Kiwi Aussie. This is one that you definitely need to be looking at right around 87, 87.02, somewhere in that zone. I think you have an opportunity potentially there to bid that. Right now we're trading about 87.90. I think we're going to get a shot at that one this week, though. That's a fantastic trade. I really do like the long-term levels. 2022 is low. I really like it when those come into play because we know that there's going to be bidders there. It's just a question of how many. Will it be the bottom of the market? I don't believe that. You're probably going to trend just a little bit lower. And remember, guys, if you're trading the Australian dollar, it's all about gold. And as gold goes up, the Australian dollar does gain a little bit of puff. You see the metals markets up. That's typically going to be a bullish market driver for the Aussie. Against the Kiwi right now, you're probably going to see 87 get taken out. I think it's a pretty good scalp, though, down there bid. We had a trade idea out last week, so just go ahead and check out our analytics feed for all the details on that. All right, guys, I'm going to go ahead and sign off here. There's a lot going on out there right now. Government shutdown's big. The peace deal out of the Middle East, the Hamas-Israel peace deal is welcome news. Welcome news. I think I can speak for everybody. It's welcome news. Russia-Ukraine still rages on. China's making some moves in the South China Sea. We'll probably talk. I don't want to talk about that just yet, but there is some things happening there on that front. The United States is moving against Venezuela, hitting targets that are local to the narcotics trade here in the United States. So we're going to go ahead and wait and see how that pans out. But those are all destabilizing things, and we're watching closely. There's a reason why metals are up. I see today's action in stocks as just sort of a bounce. They're getting back everything that was sold off Friday from Trump's tariff threats against China. So a lot going on here. If you're a trader, it's October 13th. So I would say the next month, the next 4 weeks are going to be pretty good. And then after that, we're going to start shutting it down for the holidays, and you'll start to see the markets probably really dry up. All right, no donation Friday extends to Monday. Absolutely, Daniel. No donations ever. I should just have no donations ever. Joshua Chung, thank you for your speech and teaching. Thanks a lot. Well, I'll just tell you a little bit out of my own playbook and my own experience. If any of this stuff helps you, then it's a worthwhile. I really do. When we talk about losing and rebounding and recovering, not just in finance but also in life, being able to bounce back. I'm uniquely qualified to talk about that because I've done the roller coaster. And I'll tell you what, I remember talking to a young man in Las Vegas, and he was a cab driver. He drove a taxi, and he was telling me horror stories about he was, I don't know if addicted is the right word, but he started playing blackjack, 21, the card game 21, and he started playing really high because he wanted to make a lot of money, and a lot of it had to do with satisfying his significant other, and he wanted to be, there's a saying in the United States, he wanted to be a baller. He wanted to be a player. He wanted the money and all of it, and he was telling me his story, and I was blown away, and I was listening to it. I mean, this gentleman had lost hundreds of thousands of dollars playing cards, and he was driving an Uber. He was driving a taxi, which is fantastic. You make a lot of money doing that. And he was working. He was going hard, and he told me, towards the end of the talk, he says, "Listen, you don't need all that stuff. You don't need the Ferraris and the private jets. You don't need any of it. What you need is just to be happy in your own life and a little bit of food in the fridge and a roof over your head, maybe somebody who cares about you." He said, "That's all you need." And I was sort of young and cocky, and I said, "No, I need all of it. I want all the stuff." And I still remember what he told me because I sort of did it. Did the new house and the new rigs and all of it. I had all of it. And it just sort of slowly got taken away when the market changed. It wasn't that I was doing anything crazy or reckless. It's just the lifestyle changed. And then you got to a point where you couldn't get out. There was no liquidity. I couldn't get out. Nobody wanted what I had, right? So I had to hit that point, and then I had to start building back. And like I said, it was a blessing because I got to actually transition into the markets, which is where I belong. So it's easier said than done to make a positive out of a big negative, but you can do it. So if you're facing some big negatives out there, sit down and figure out what it's going to take to get this thing on the right path and get up to your cruising altitude. And then you just let it rip from there and enjoy your time. Life's short. Enjoy your time. That's for sure. That's for sure. We can tell I can tell stories all day on this stuff, but you got to believe it. It doesn't matter how deep the hole is. There's always a way out. There's always a way out. Just takes time. That's all. Something to think about. All right, let's see. Does daylight savings time? Let me see. And I come across a lot of trading channels. This is a good one. Thank you. I sure appreciate you joining us today. Does daylight savings time affect the market momentarily in any way? It just changes your Team Marina. It just changes your times. I mean, I know it's Captain Obvious, but I hate daylight savings time because you got to spring ahead, fall back. So it's the idea, you get an extra hour, but it messes up my routine, so I don't like it. But it's not going to change your markets. Maybe the ag markets a little bit, but right now everybody's trading beef. Everybody wants to know when the price of beef is going to come down. But that daylight savings time shouldn't affect you that much. Let me see, Daniel. I think short-term USD is bullish. I'm going short. There's nothing wrong with that, Daniel. There's nothing wrong with that at all. Right now, the U.S. dollar is showing signs, and if you're a short-term trader, absolutely ride the momentum. I'm a bear. I think that the dollar is going to fade later in the year, and then into next year. Into next year is when you're really going to see the dollar fade, because that's going to be the game plan, is to get the economy going and hitting on all cylinders. In order to do that, you have to devalue your currency and put more of them in the system, more dollars in the system. Let me see. Is this because of soybeans? I don't even know what's going on in the bean market. I used to trade ags. I don't really do it much anymore. It's hard. Agricultural commodities are hard. You got to know a lot. You got to be sophisticated and know your business. Let's see. The Friday crypto crash affected a lot of people. TJ, crypto's interesting. I saw Bitcoin down there right around 114. Just a quick look at price. You know, 106. It's a fantastic level. You sort of got the wash out there and then the retracement down there at 106-ish. You probably got a pretty good bid there. The thing about crypto is we're fans. I think that you want to be long if you can, but you're absolutely correct. I mean, a daily chart, we went up right around 125 and then a big-time washout. It really isn't unlike the gold market. If you're long, you're right. It's just about how much pressure can you take. How much pressure can you take? Absolutely. Got it. Absolute T. All right, guys, I'm going to go ahead and sign off. Let me see. And, I would love for beef to go down. Man, I tell you what, our diets are changing. That's the way it is. We had a deal here in Dillon for tri-tip. They sold a bunch of tri-tip, if you're familiar with the cut of meat. So they had it on sale for like $3.99 a pound. And tri-tip's pretty good cut of meat, pretty good cut of beef. And I filled the freezer up. I bought like 10 of them. And then it's funny because it goes from $3.99 and it goes right back up to $7.99 a pound. So as soon as there was half price, man, I filled the freezer up. That's for sure. I like beef. I can't eat it every meal anymore. I'm getting old. I got to sort of take care of the old ticker, but beef, chicken, beef and chicken pretty much. Beef, chicken, and fish. Can't get good fish in Montana though, really. All right, guys, I'm going to go ahead and sign off. Absolutely, you're welcome, Blue Mango. Fantastic session. If you have any questions at all, head on over to How to Trade. Hit me up. Send me a private message. I'll be sure to help you. Remember, Switch Markets. If you want to trade, Switch Markets has got you covered. Thousands of markets, zero commission accounts, tight spreads. Go ahead and check it out if you're interested in trading. All right, guys, that's a wrap. I'll be back tomorrow. The timing is going to be a little bit different. We're going early tomorrow. Tuesday strategy session, trading the IMF meetings. The IMF meetings are a big deal. We'll go ahead and cover some of the developments there. But it's no coincidence that you had a big peace deal during the IMF. It's not that the IMF was any part of the peace deal, but one thing about the Trump White House is they always like to steal other people's thunder. They always like to have a big announcement when other people are doing something big. You'll see that more and more. All right, guys, I'm going to sign off. Have a fantastic trading day, a trading session. Remember what I told you today. There's no hole too deep to dig out of. You can always dig out of it. You can always come back. You can come back bigger, better, stronger, and a better trader. And the first step is just looking at these screens all day and getting used to what you're looking at. If you have any questions at all, I'm always around to help. Have a fantastic day. Trade the action well, and we'll talk soon. See ya.